Welcome to On Block Off Block by AeroCloud. On Block Off Block explores the exciting and ever-growing aviation industry with guests working in and with airports, and is hosted by AeroCloud CEO George Richardson.
In this episode, George speaks to Patrick lUCAS, a seasoned expert in airport economics, about his journey from a statistician at the UN to leading his own consultancy, the complexities of airport management, economic regulation, and the importance of data analysis in making informed decisions.
Patrick, you're a respected voice in global economic activity with reference to airports. With over a decade at ACI World, where you served at VP and Chief Economist, you helped shape the industry's approach to airport charges, regulation, and financial performance. You're advising governments, regulators, and airport operators across every continent, and now you lead your own consultancy, the Airport Economics Consulting Inc. From benchmarking productivity in Latin America, guiding regulatory reform in Saudi Arabia, and teaching ICAO ACI courses on airport economics, you appear to bring a rare mix of analytical depth and strategic clarity. I'm excited to unpack the numbers behind the airport business and the stories behind the policies. Welcome, after that long introduction, to On Block Off Block. Thanks for coming.
Well, thank you so much for having me. It's great to meet you and to engage with you. And thank you for that introduction.
You're most welcome. Let's go back to the moment that you realized that aviation was to be your vocation, and what were the sort of turning points or where you got to ultimately?
When it comes to aviation, I was kind of a late bloomer. So I actually came to aviation a bit later in my career. I started off as a statistician working within the UN system, so a United Nations Statistical Office. During that time, I completed graduate studies in economics. Before the SDGs, so the Sustainable Development Goals, there was the MDGs, which was the Millennium Development Goals. So it gives you a bit of an indicator of my age. So I was there within the UN for about 10 years. And on the 10th anniversary, I said, now it's time for a change. And that was really kind of the turning point. And there was a position for an economist at ACI, Airports Council International, and they took a chance on me. Some of those skills were transferable, and I haven't really looked back since. So, aviation, airports is very exciting and dynamic. A lot of things happening. So, as they say, once you're bitten, you never leave.
Yeah, absolutely. I'm finding that with a lot of my guests. And you did a fair stint there, nearly 13 years, right? As an organization, what is it like to be part of something like that?
Well, I think being part of ACI, every day we're working on different types of issues. So, I was responsible for the policy branch, but also the analytics branch. And so we're, seeing kind of the data in real time come in and gleaning those insights. So that part was really exciting, being able to kind of communicate that information to the industry. And then working on different policy topics. We could be working on the Middle East. We could be working on different high growth markets like India or Latin America from week to week. So I think that exposure was really helpful to me in terms of my own development.
Yeah, absolutely. And fast forward to where you are now, you've set up your own advisory and consultancy business off the back of your experience. Give us an example of what you're working on that you can talk about, and an example of the day in the life, if you like.
Sure. Kind of a typical day, and it's really kind of project-based, right? So a typical day, I am based in North America, so I do have a lot of overseas calls. So either on projects I'm working on, or working together with other consultants on potential bids or proposals. I also do a lot of teaching. So I teach through the ACI, ICAO, and ICAO is the UN organization responsible for civil aviation. There's something called the unpacks program, so Airport Management Professional Accreditation Program. So I do a lot of virtual courses. Some are on site, some are virtual, but usually the virtual ones are in the morning. And then in the afternoons, it's really kind of, rolling up the sleeves, either kind of crunching the numbers, putting together slide decks, or if I have some clients based here in Montreal, I go visit them downtown. So it's a blend, I would say, over the last couple of years, a blend of kind of using data to inform policy making and decision making, in front of regulators, and helping some airport operators build that business case.
And just revert back to, just out of pure interest, Who are the people that are signed up to learning? Are these airports existing, trying to increase economic policy? Are they students looking to get into the realm of business that you currently operate in? who are those people that are taking those
Yes.
lessons?
I mean, the critical mass is really those individuals working at airports, kind of moving into management positions. Although we do have a segment of that kind of population that come from regulators, so civil aviation authorities and the economic regulators. We do have sometimes airlines that join in as well, right? That work closely on airport site. So that's more or less kind of the profile.
Okay, and just as a slight question as well, a little bit off topic, is that when we talk about regulated markets or heavily regulated markets versus relatively unregulated markets, obviously aviation is I suppose you could say, a very important backbone of local economy, but also it's quite a dangerous area. It could also be political. How do you sort of negotiate that? And how do you think about, the future where we stand now is like, Aerocloud operates predominantly in the US and Europe. We do a little bit in the Middle East, but those markets are so different. So do you work across all of those markets and advise on all of those markets or specific markets?
Yeah, well, I mean, when I was at ACI, it covers the whole spectrum. I would say over the last couple of years, I was centered on, in particular, Saudi Arabia. So there you've had a new economic regulation being put in place. There was something called the Vision 2030, but it really kind of permeates every region, at least historically where I've worked. But when we think of regulation, we have to distinguish between, safety regulation, which is critical, right? You have these also what is called the ICAO SARPS standards and recommended practices, and these kind of trickle into the regulations. My area of focus is mainly on economic regulation. So how things are priced from a regulatory standpoint. How do airports price their services? When an aircraft lands at an airport, what's the formula that's behind that? And that varies. Usually when I was working at ACI, the thinking there was more kind of light-handed approaches to the airport business. So what are the kind of the models that give airport operators and investors a bit more freedom to develop their business?
Yeah, absolutely. I see that aeronautical revenue becoming a lot more important than it has been in recent years in the time I've been in the business, right? People are saying that car parking revenues are going to decline. Retail revenues are tough, I think, depending on where you are. There's obviously different disparities as also that I've learned between what I know about European airports and how they operate, with a lot more low-cost carriers maybe than the US, having a little bit more of the legacy carriers, especially right now with what's happening with some consolidation there because of companies maybe not being as successful as others in the American market. But what are the crux of deciding on how you price? Because obviously you've got to price your airport to be attractive for international service, to increase local economics around that airport and macros for that country or for that continent. But at the same time, the airports have to make money, right? Because they have stakeholders to please. So how do you sort of approach that at a very high level for us mere mortals to understand?
Yeah, well, that's a really good question, because oftentimes airports are perceived as monopolies when in fact they actually compete on different segments, right? So, for instance, you have some of the big European hubs, whether we're talking about Frankfurt, Amsterdam, Heathrow. I mean, they're competing with each other for connecting traffic. And they're not only competing amongst themselves, they're also competing with the likes of, Doha, Istanbul, and Dubai. So, how do you kind of establish that type of pricing to compete with, say, connecting traffic? That's the hubs. Then there's also those airports that may be even within a similar catchment area. How do we think about that? How do we create these incentives for airlines to come to your airport? Could be these discounts, volume discounts that are, if you achieve a certain load factor, you get a rebate. Now, usually the pricing model is based on some type of cost recovery mechanism. So you have, like any other business, you have operating expenses, personnel costs. You will have your depreciation expense linked to your infrastructure, right? You don't charge all passengers or airlines all at once. You charge them through depreciation. And then there is what is called the cost of capital. So some airports are able to finance some of the infrastructure through their revenues, but a lot of it is financed through debt, equity, or a combination of that, right? And so all of those little ingredients usually go into what is called the regulated airport charge, right? And then there are these little kind of incentive schemes that you could tie to that, as I mentioned earlier.
Fantastic. Super interesting. What would you say is the fastest growing segment of all of that? Is it hard stand development? Is it competing for these connecting segments? What's the fastest growing segment? And could you please sort of give us an idea of how that's evolved over, say, the last 10 years and what's really front of mind today?
Yeah, I mean, if we think of it in terms of markets, there's been this, what they call the eastward shift. So you have very high growth in some of the Asian markets because that's where most people live. You have markets like China, India, Indonesia, Vietnam, Philippines, very high growth markets. I mean, we just think of those markets alone. There's 200 countries in the world. They make up about 40% of the world's population. So you have very high growth in those regions, and you also have investment in those regions, the new greenfield airports, so on and so forth. So there, it's like developing those models that kind of incentivize investment, finding pricing that strikes a balance between the different stakeholders. So that's kind of the growth that we see in terms of from a market perspective. When it comes to other segments or revenue streams, and you had mentioned this earlier, some of the aeronautical side, for the most part, represents about 55% of revenues globally. Now, you do have some airports in the Middle East and Asia where the majority share of their revenues come from non-aeronautical sources, right? So, and I mean, this is not just in those regions. You also have in Europe, also in those regions that have very high international traffic. So that's also linked to the duty free. But there's a strong focus on kind of customer experience. So that's another area where you see this high growth because you see this relationship with revenue generation. So that's another segment. Yeah, go ahead.
I mean, the other thing is that what I see is the US is far more interested in, say, passenger experience and typically expands with large capital projects a lot more.
Yes.
Whereas the European market, and please correct me if I'm wrong, but the European market can have some airports giving landing fees effectively away or an ultimate rebate over a long period of time because they are more shopping mall type airports that make their margin on the revenue share of UH Smiths and selling water, for example. So what are you seeing in the emerging markets? Are they taking a hit on aeronautical revenues to begin with to expand those routes and to get people hooked on flying to those emerging markets? Or are they trying to make money along the way? And is there any insight that you could give us there?
Yeah, well, I mean, it's interesting you brought up the US, Europe, and the emerging markets because there are differences, right? If we go back to the US, it's largely a domestic market. So in fact, even it could be argued that, duty free and retail is still even underdeveloped. The big source of revenue there historically has been car parking. So that is an area that's been developed. And there also you have a different business model. You don't have any private investment in those airports. So it's a pure cost recovery system. Usually the airlines rent out the terminals. So a lot of the revenues come from terminal rentals. Whereas in other parts of the world outside of the US, a lot of the revenues are coming from, if we talk about the aeronautical side of the business, passenger related charges. So there's almost a kind of a degree of risk sharing between airports and airlines that say, look, we will put the ultimate cost of the infrastructure on the passengers. So thereby, I think like your point was, whereas the kind of the landing charges and those charges that are levied on airlines could be lower, but then offset by passenger related charges and revenues. So you do see that in other parts of the world, whereas in the US, it's kind of a unique scenario.
Yeah, 100%. How do you calculate such far out? Because, as you've been talking there, you're working, I assume, on projects that are going live, let's say in 2035, for example, which is not a short time frame for airport economic policy, I'm assuming. How do you start to calculate what passenger growth is going to look like at some of these airports, and how do you calculate how much they're actually going to need?
Well, I mean, the story of airports, the story of aviation is really linked to the story of demographics. So understanding those demographics and what that means in terms of air transport demand, at least over the longer term, gives us a sense of things, right? If we take India, for instance, and we look at, say, the working age population, so those between, say, 15 and 65, that working age population is still yet to peak in the decades to come, right? So why do we care about that? Well, because if you have a bigger population, working age population, the propensity to travel increases accordingly. And then, of course, we pair that to what we need in terms of infrastructure projects and those capital needs, right? So it really kind of going back to those baseline fundamentals related to population is really the guiding light. Of course, there's other factors more in the medium term, related to GDP growth, input prices, and all of these things. But really, the demography is the guiding light.
Yeah, because some of these loans and debt facilities that the airports are creating, in some cases, private debt facilities, and then also split down, I assume, into government debt facilities, they're so large and they're often driven by capital infrastructure. A lot of the things that I think about and how we sell our product, for example, is that you don't need to build more runway to gain capacity out of the current one.
Yes.
Or the stands. One of our lines is that, software is cheaper than cement, effectively. And especially in America, they've had a long, illustrious history of rewarding big capital projects to grow, whereas some of these smaller regionals in the developed market, say in Europe, are really having to turn to other sources of how they get their expansion, i.e. technology, purely because they're so landlocked, right? So, a regional airport in the US is typically not as landlocked as, say, Manchester, UK, which is one of the most landlocked airports I've come across, for example. So how do you look at that? And, do you agree with that, or am I completely wrong?
No, I think it's striking the balance. So I think you gave some good examples there. So when I say striking the balance, when do we need to develop the infrastructure from scratch, greenfield, and do we have the space to do it? Now, in places like Europe, though some of those airports are capacity constrained. And I think you hit the nail on the head. How do we make processes more efficient? How do we make existing rules of the game more efficient? So we could be talking about slots, regulation. So how do we make that more efficient so that we could accommodate traffic? And then also call them the managerial levers, something you're involved in. How do we make the processes more efficient? How do we alleviate bottlenecks? How do we accommodate more traffic? Maybe increase dwell time, increase revenues. All of those things are linked. So, but I think the first prerequisite, you said it very well, is kind of thinking about how do we make existing processes more efficient before going straight to the, pouring down the concrete.
Yeah, 100%. Scoping right out, you've worked with ACI, ICAO, ASA. What are the major trends that are on everybody's lips in your world right now? What's innovative in airport economics that others should be watching and people should be consulting the likes of yourselves to talk about and to ideate on?
Well, I mean, there's multiple areas, right? I think we covered some of them already. One, if we think of it kind of a common denominator across the industry, there's been a big issue around labor shortages. So whether we're talking about air traffic controllers, talking about people in airport operations, pilots, all of the, the whole suite of personnel working at airports or around airports or in aviation, the labor pool has essentially contracted following the pandemic, unfortunately. So this is on everyone's mind. It's kind of a supply side issue because we still see demand rising. I mean, despite the geopolitical situation we're seeing this year and all of those risks, demand continues to rise, but we have those bottlenecks. So making sure that we attract the next generation of aviation professionals is kind of a critical point in terms of planning for the future.
And, that's all well and good. And I think a lot of people have identified that as well. We've done a couple of podcasts where we speak about exactly that, where airports specifically in Europe had to let a load of people go, in which case they then reskilled and did something else that was far more attractive. Because let's be honest, at the lower end of the arrival spectrum, if you think about a turn, being a ground handler in Manchester in the winter is not the most attractive job. We also have challenging environments, the flip side, like, we deal with Palm Springs and some of the West Coast airports, 45 degrees, unbelievable conditions to work in. And then you also have airport management, particularly in developed markets like the US versus the EU. In the US, they're federal agencies in a way. You are a civil servant. In the EU, they are owned privately. So do you see the disparities as well in who's successful with the labor shortage as to how they're owned? Is it more attractive for labor to work for federal owned agencies, or is it more attractive to work for a public-private partnership or a private company running and driving those results? Typically, we see public entities being less efficient than private ones. Is that the same in your world?
I mean, yes, it's true. I think we saw this in some of the data, and you mentioned it, where some of those private airport operators, where they had to bring on more debt and unfortunately had to lay off staff. Whereas in other parts of the world where you had more of a public system, some of that personnel could be shifted to other use, right? So, you do have those differences. I guess like any other type of industry, right, there tends to be a bit more security when it comes to working potentially for the government as opposed to the private sector. So I would say airports are not necessarily unique in that regard. Now, which one is better from a salary income point of view? I mean, the jury's still out on that. But definitely you do see more security in terms of, that balance.
Yeah,
With
it's not just
respect
money
to,
though, is it? And I think a lot about the people using our systems. We do common use and passenger processing
yeah,
systems, and the people behind the desk that are usually dealing with a passenger with a problem, opposed to a passenger complimenting on the process. So effectively, what happens is now frequent passengers are so easy to travel because they're used to the process. However, if they're not traveling as infrequently or they have a problem, they have to go to a desk in which our system is often solving that or being at the coalface
yeah.
of solving it. It's not a particularly nice job to deal with members of the public there. So I often think about how can we make that user's life easy, and how can we uh, retain those people? Because when I think on airline side specifically and ground handler side, before the pandemic, people were very proud of incredibly long tenures. Now we're seeing the tenure be a tenth of what it was on average. It's absolutely nuts how it's declined, and you're 100% right in that. Talk to me about the trend with regards to public-private partnerships, because this is relatively new. I don't know an awful lot about it, but could you explain with what the basics are with public-private, and then
Sure.
why it's being a successful business model for airports of the future in the near term?
Yeah, I mean, you're seeing this over the last decades, right? And the genesis of, call it privatization or public-private partnerships, goes back to the airports in the UK, going back to the 19s. And then from then, you've had a series of what is called major concessions across the globe. So, I mean, that process is relatively, call it young. It's over a span of 30 years, but it has grown quite significantly. And sometimes P3s or PPPs are mixed up, right? We need to kind of think about it in terms of a gradient. You have what is called management contracts, which tend to be a bit more short-lived. So those airport operators or those airport management companies don't usually put skin in the game. They're just managing an airport. Then you have concessions, right, or sometimes called BOTs, build, operate, transfer, and those are usually 30 or 40-year concessions. So you have an investor or airport operator that builds up the infrastructure, makes their money back, and then transfers it back to the government. And that is a model that you see is very prevalent in Latin America, also in Europe as well, but other parts as well, right? And then you have full-scale privatizations, what they call full-scale trade sale or lease, right? And maybe the government basically gives you a lease of 100 years, but you occupy that airport. So it's kind of a full-scale privatization.
Yeah, I mean, the airports can be incredibly profitable, right? So I think that can be an incredibly attractive, use of funds to very large companies, especially when you think about the returns that they can make elsewhere on their cash as that declines, et cetera, or the returns on cash decline. You've got the companies that are also buying toll roads and large infrastructure projects, railways, et cetera. Airports are classed in that same asset class. Where are the markets now that are most attractive to those buyers or the people that are buying into that public-private?
Yeah, I mean, there's some momentum now being picked up in parts of Southeast Asia, like the Philippines, also in Saudi Arabia. You also have in India, there's supposed to be another wave of kind of a cluster of airports. You've seen this in Brazil as well, where what the government does, and when I said cluster, they privatize a bunch of airports, right? Because sometimes you have smaller airports that are loss-making, and then you have the bigger airports that are more profitable. So it provides some balance, I think, from a government standpoint. to make sure that those smaller regional airports are taken care of and developed, but also kind of this profitable airport is put in the mix. So we've seen that particularly in places like Brazil. And I mean, governments are turning to P3s because, I mean, let's face it, governments are becoming more and more indebted. So financing infrastructure through the public purse over the longer term is not always feasible. So it's not that, private is better than public. For me, I think you've seen there's many public airports that have great service quality, are doing great things, but there's no denying the fact that some governments are becoming cash strapped.
Yeah, absolutely. And what's also interesting is that from my perspective on your world is that it's much better to have multiple. Similar to being a landlord in many respects, is that it's very difficult to make money on one property. But if you have a blend of 100 properties, it's great to drive those sort of exceptional returns. And we see large groups that have got 40 airports under management and might also have ownership in 20 of them, et cetera, and demanding ownership in the other 20 that they're just operating in, for argument's sake, in a country that they are also economically important. They can start to monopolize their return, if that makes sense. And they can start to drive their return because it's based on the averages of 40 of them. Is that how it works? Or is it much more profitable for these smaller deployments of one or two, a blend of hub and regional? What is the ideal business model for somebody in the private sector, right?
Yeah, I think that's a great question, because you do see the rise of these major airport groups that, transcend the different borders, and they will have a portfolio of airports that, some are big, some are small. And I remember looking at the data of some of these big airport groups, but because their traffic profiles are quite different from market to market, they were able to kind of minimize risk, right? Through that diversification, as you very well said, right? So they may have had those airports that were more kind of domestic oriented, which we saw during the pandemic. There was a substitution effect happening. So it allowed them to kind of mitigate those risks. Now, that being said, you do have some stakeholders that are starting off, some airport groups that started off at some point having just a few airports under their belt. But indeed, I mean, that's the golden rule of portfolio management. Diversification minimizes risk.
Absolutely. Super interesting. Right. Let's span out to more on the economic side. So you've led teams of economists, forecasters, data scientists. What's your approach to turning such a wide, complex data set effectively into actionable insights? I mean, I recently have been reading some reports in preparation for a tender that we're doing at the moment, with 700 pages long for the next 10 years of said airport that we are looking at doing business with, for example, to try and learn about whether they've actually hit their goals over the last 10 years and sort of try and get an understanding of how they're driving price on the basis of what you said with regards to what debt they've used in order to drive what return. How do you turn such a massive piece of work into something that people can understand? Because we all know that the C-suite of today kind of need a very high level PowerPoint to get behind, opposed to recall and identify multiple areas in a 700-page document. How do you get big data into actionable and
Sure.
bite-sized chunks that people can use?
I mean, thinking about the data lifecycle, and, since I started off my career as kind of a data guy, statistician, I have a weakness or a lot of empathy for the data scientists, the data engineers, putting all of this together, because that is I think really the challenging part, getting the data right, ensuring the data quality is there, the coverage, the representation. So whether we're talking about data that is captured in real time or data from administrative records, a global data set, we have to ensure the integrity of that data. So for me, that's the big ticket item. And then as someone who was senior working together with those teams, I came in and did more, I would say, the superficial stuff, adding in some of that storytelling, which is important, and adding some flavor to that, where you said you have to kind of communicate that to the C-suite. But really the backbone or the foundation is quality data and information that you build up over time. You may not even realize that what you're collecting is useful today, but it will be useful in the future. So I think that is really the kind of the critical piece. Then, of course, there is the art of storytelling and packaging it in such a way that's digestible for a decision maker. And that's where it becomes more of an art form than a science.
Sure, and that's where the C-suite come in, right? Because they're not just running these companies that are thousands of employees in a very complex environment. They're also part-time lobbyists. They're also part-time fundraiser. They're also part-time finance major trying to assess the incremental gains across the board from a cost basis and also a revenue basis. So, giving them the coaching and just to carry on to that is like, how do you coach these CEOs to be able to take the research that you've done and get it into the channels that we just discussed?
Yeah, I think kind of things that are tangible and then moving backwards. They're not going to start off with presenting a spreadsheet and discounted cash flow model, net present value. That's important, but you need to kind of make it tangible. So are we investing in biometrics? Okay. Are we investing in another security lane? How do we trim 3 minutes off of a turnaround time? And then kind of work backwards from there. So first telling the story, looking at different scenarios in a qualitative sense. And then we bring in the data afterwards and the KPIs and all that thing. So I think we need to kind of start off with the storytelling and the tangible elements, and then kind of move backwards to that in terms of the packaging.
Yeah, that's great advice. I think for the vendors in my space, because, we operate on such long sales cycles. Biometrics is another classic example, right? So we're biometrics. We're processing passengers using biometrics as we speak and developing that further. But the real benefit of that is, if we're all really honest, we don't know the pace in which it increases and which pinch points those passengers will then continue to spend in other areas. So, for example, if you're processing passengers incredibly quickly, but you have nothing for them to shop in, that's an issue. So it's very much taking the CEO out of the realm of what he or she has got today and showing the knock-on effect of, if you change this, you make sure you have to have that, and getting that more holistic view. And I think to be honest with you, that's kind of a barrier a lot of CEOs are facing right now, because there just isn't the amount of time to try and keep up. Because I think we have over 50% of our client base are operating well beyond capacity, and the other 50% is coming right up to capacity. There are a lot of airports operating at capacity that weren't built to be operated at the numbers that they're processing. So that's a task in itself. And I suppose where you come in is you allow them to helicopter out and understand what they're doing with that. So that's fantastic. And, everybody, I think, is open to learning with reference to that.
I mean, there's kind of these two schools of thought on that when it comes to investing in technology and the passenger processing and all these technologies. There's one view that if we speed the passenger through the terminal, they're not going to purchase anything. Then there's the other school of thought. Well, no, technology will make their life easier. They could already start doing these transactions off the airport site. They will feel relaxed and comfortable, and it impacts the customer experience. So, the propensity to spend will increase. I tend to think about the latter, where technology will prevail. But because we're still in our infancy on that data, we'll have to see how that pans out in the years to come.
Yeah, one just question that just pops into mind that is slightly back into what we were just speaking, if we may just jump back for a second, is when you talk about sort of a greenfield airport, and how do economies, local economies or governments or countries, how do they decide to start an airport in said place? How many years does that decision take? Because it can't just be based on the amount of population, because that population has to have a need to travel, I assume, or a need for medical, or a need for education, or a need for commerce. So could you just give us a high level of how that works? How would you come to a conclusion of building a new airport in a landmass within the Philippines, for argument's sake?
Yeah, I mean, ideally, there's kind of a cost-benefit analysis that is done, where looking at not only the benefits to the stakeholders that are investing, but the broader benefits to society in terms of those socioeconomic gains. Usually, what does it mean in terms of, they call it the catalytic impact. So airports, aviation is linked to tourism, to hotels, the hospitality industry. So usually there's studies beforehand that look at the socioeconomic footprint of a potential airport development. So these things are done years in advance, maybe even decades. This is why civil aviation authorities have the longest time horizon. They want to see forecasts of 50 years. So that allows them to plan more effectively, from an urban planning perspective, a ground access point of view. And then, when it comes to tendering, if there's some type of public-private partnership, there's multi-stages. I mean, at least the good ones that are designed in a robust way to see through requests for information and then the RFP and so on and so forth. And that too takes years as part of the due diligence exercise. And I think there's a pretty good coverage over the last 30 years in terms of some things that have worked, some that have not worked. But having that rigor I think is important. One thing that's quite interesting, and, there was some research that was done on this recently, and I did some of that in the past. What is the optimal airport size, right? Do we, there's a lot of thinking, let's build this mega airport that could cater to, 100 million plus. But is there a sweet spot for something smaller or having multiple airports, right? So those sometimes come down to a political or policy decision.
Yeah, I think that would be fascinating. That's fascinating, and maybe for another podcast. But actually, is these new mega airports in the Middle East, are they actually a nightmare to manage given its size? Are they actually a nightmare to compete against those routes that you talked about right at the start? Or would they be better off with chopping it in half and moving it 50 kilometers away from each other, or in a different direction towards another city, or next to a bigger hospital or a commerce district or whatever? Fascinating. And I think that's kind of where we do very well with regionals in the US, like very well. That's like very much a huge part of our business. And that's purely because people have moved out from the cities with a better connected world now that, it's very acceptable to work from home, whereas before it wasn't. So regionals have done incredibly well. They've grown and outgrown in terms of percentage and relative size to hubs in the US now for the last sort of 4 or 5 years, and they're top performers. But I do read obviously about these mega projects that are nowhere near completed, right? And they're making huge decisions already on software vendors and all sorts of things. And kind of just like an open checkbook to a certain degree with regards to the Middle East specifically is what I'm talking about. And actually the reality is that maybe it could be that they half the size of it and create 2 mega hubs in that same region, which might be more profitable and easier to manage. Yeah, I love that.
Yeah, and I mean, in some of these jurisdictions, aviation is seen as a sunrise industry. So they're doing everything they can to finance that, either through P3s or blended finance. Whereas in other parts of the world, right, let's face it, are considered more mature markets, or sometimes it has a bigger carbon footprint, and there's all of those issues. So the government philosophies in different parts of the world does vary quite significantly and has an implication on that infrastructure investment.
Fantastic. Super interesting. If people find you interesting and what you're working on interesting, how's the best thing what's the best medium of reaching out to you?
Sure. I mean, it's quite easy. My website is airporteconomics.com. There's a little tab there that says Let's Talk, and you could reach me on that. It's info@airportecon.com. But airporteconomics.com, very easy to find.
Great. Well, thank you very much for being a great guest. Really appreciate you spending the time with us today. And hopefully this can spring some ideas for everybody that listens. Thank you very much.
Well, thank you for the invitation.
Appreciate it.
Thank you for listening to On Block, Off Block by AeroCloud. If you enjoyed this episode, please leave us a review. And remember to hit the subscribe button to stay up to date with future episodes. On Block, Off Block is hosted by George Richardson and produced by Alex Greaves.